Hello traders and welcome back to the Forex Geek. Today we're diving into one of the most powerful candlestick patterns in technical analysis, which is the Bullish Kicker Candlestick Pattern. And this pattern signals a sharp reversal in market sentiment, often leading to strong upward momentum. So if you're looking to spot potential bullish reversals before they happen, this is a pattern you want to master. So stick with us until the end as we break down how it forms, the psychology behind it, and how you can use it to improve your trading strategy. So without wasting any much of your time, let's get started. So first I'll just show you how it looks like and its characteristics and how to identify it. Then we'll go to the charts to find it in real market conditions. So the bullish kicker candlestick pattern is a powerful two candle formation that signals a sharp reversal in market sentiment. So it's most commonly seen at the end of a downtrend where sellers have been dominating the market. And this pattern indicates that buyers have suddenly stepped in with force, completely shifting the momentum. So let's break it down. The first candle in this pattern is a long bearish candlestick. So price was initially bearish, giving us lower lows, lower highs, lower lows, lower highs, and then this candle, which is the first candle. So this candle represents strong selling pressure where bears are in full control, pushing the price lower. So it's important that this candle is sizable, as it shows that the downtrend is well established and that sellers are confident. So the second candle opens with a significant gap up from the previous close, meaning that buyers have entered the market with such strength that they are willing to pay much higher prices than where the previous session ended. So this candle should close higher, forming a strong bullish candlestick. And the gap between the two candles is critical because it represents a complete and sudden shift in market sentiment from bearish to bullish. So this is how the gap is, or you could use the close and open. But one thing is certain, you must find this gap between the bearish candle and the bullish candlestick. So for this pattern to be valid, there are a few key terms to look for. The second candle must open above the previous day's close, and the gap should remain unfilled, meaning the second candle shouldn't retrace into the range of the first bearish candle. So the strong bullish close on another thing to look for is a strong bullish close on the second candle, confirming that buyers are in full control. So this pattern often occurs after significant news or events that cause a sudden shift in market sentiment. So when you see this setup, it's a clear indication that buyers have taken over and are likely to push prices higher in the near term. So without wasting your time, let's hop on the charts and look for this candlestick pattern. Let's identify it on the charts on real market conditions. So you can see this. You can see the candlestick pattern right here. You can see the bullish kicker candlestick pattern right here. We have this gap between the bearish candle and the bullish candle, and this is happening at the bottom of a downtrend. So we are bearish, and we had this pullback. So it's like market has changed from bearish to bullish right here. So we had this pullback into this zone, to this support level right here. So we're looking for price to give us a push to the upside. So you can see this bullish kicker candlestick pattern forming right here, which indicates that buyers are stepping into the market with force and momentum. And also one thing you should also look out for is the volume around this area. So increased buying volume around this area is necessary to confirm your bullish kicker candlestick pattern. So you should look for rising buying volume right here to confirm this candlestick pattern. And let's look for another example. We'll talk about the entry strategies shortly. Let's look for another example of this candlestick pattern. So this is another example. This is the gap between the bearish candle and the bullish candle. It's a small gap. So, and that is your bullish kicker candlestick pattern. No, let me know if we could see another example. Perfect. This is perfect. Now look at this one. We are bearish, and you can see the gap between. Actually, price came back later to fill in that gap between the bearish and the bullish candle. So this signals that we should be looking for buying opportunities at this downtrend. It shows that market is shifting from bearish to bullish. And this is another one, another example. There's another example. And market came back later on to fill in this gap and give us a push to the upside. And I think that's enough examples. So let's talk about how you can trade this signal. When you spot this bullish kicker candlestick pattern, what's the next thing you should do? What's the next thing you should look for? How can you enter? You don't just spot it and enter. Sometimes these candlestick patterns are not reliable, and they could give you false signals. So what are key things you should look for, and how can you trade with this pattern? So the first thing is to buy at the close of the second bullish candle once the pattern is fully formed and confirmed by a strong close above the previous day's high. So you should place your buy entries at the close of the second bullish candle, which is this. Once this pattern is fully formed, the close of this second bullish candle, and your stop loss should just be below the bullish kicker candlestick pattern, and you can set your take profits at previous resistance levels like this one, or you could just do a 1:1 or 1:2 risk to reward ratio, whichever one suits you. And that was how we were able to catch this buy trade using the bullish kicker candlestick pattern. You could also add some confluence to it. You can see this is a major support level, and it's expected price should come back to this zone and give us a push to the upside. So that's how we're able to catch this trade using the bullish kicker candlestick pattern. And let's look for another example so can explain better. For this one, you should look for a close above this candle close above this candle, and that's the close, and your stop loss should be below the bullish kicker, and take profit levels could be this resistance level right here, and that gives us a 1:2.5 risk to reward ratio. And that's how you're able to catch this trade. Let me look for another example. You can see this was a major zone which market could react to, and that was how we had this added confluence. And also let's also check the volume. Let's see the volume right here where we had that second candle is quite bullish. You can see there's buying volume around where we had that second candle confirming the bullish kicker candlestick pattern. So let me look for another example. So this is another example you can use with the bullish kicker candlestick pattern. You see we had the bullish kicker, we've discussed this. So you should wait for a close, a candlestick close above this high, and we had that right here. That is the close, and stop loss below the bullish kicker candlestick pattern. So our targets could be 1:1 or 1:2, or you could target resistance zones like this one. You target resistance zones for your take profit. So remember, this is the daily time frame. So if you need bigger risk rewards, you could scale down to the lower time frames and look for buying opportunities after we've had this candlestick pattern on the higher time frames. That can give you higher risk reward ratio. You can see this one. We should wait for a candlestick close above the high. So looking at this, we had the candlestick close right here and stop loss below the bullish kicker, and let's see, this gives us enough room to breathe. So it's always essential you set your stop loss properly. Do not try to put up tight stop loss, because sometimes the market could give us a price action like this where it could have hit our stop loss if we didn't give our stop loss enough room to breathe. So this is another one. You could set your take profit target at this resistance level. So that's how we're able to catch this trade. And also added confidence is that this is a major support level, so it's expected to hold. And when I look at the volume, you can see there was a very good selling pressure around here, but as we had that buy, a bullish kicker candlestick pattern, that was the first significant buy in volume we had in a while. And after that, you can see increasing volume after we had our entry. That is why you should wait. That's why I had to wait till we had a close above this bullish kicker candlestick pattern, the second candle. And as we had that close, that was where we were seeing increasing buying volume in the market and buyers stepping into the market. You can also confirm with indicators to increase the reliability of the setup. It's often beneficial to use additional technical indicators. For instance, to enter trades when prices are above a key moving average, such as a 10-period moving average or a 20-period moving average. So let me just add the moving average to this chart to show us how we could use the moving average for added confirmation. So for the moving average, I'm going to use the 20-day moving average. And like I said, you could consider entering when price is rising above the 20-day moving average. In this case, we had our entry above this moving average, and this is a very valid one. And you can use it for additional confirmation. This was another one. This is perfect. And let me look for another one. You can see this one, entry below the 20-day moving average right here it wasn't a wise decision. So we had to wait for the close above the bullish kicker, and this also coincides with the moving average, because as we had that close above there, price was also going above the moving average, the 20-day moving average, giving us added confirmation. So we were able to enter this trade. I'll take profits at this highs and our stop losses below the bullish kicker. That was how we were able to catch this trade, this buy trade. So despite its trends, the bullish kicker pattern is not foolproof. There are times where the pattern may give false signals, particularly in volatile or unpredictable markets. So false signals happen when you just have the the candlestick pattern forming, but you have a whipsaw or the candlestick fell in just after that. So we almost had a false signal right here, but we used the additional tools to confirm it and validate it before our entry. So it's always wise to use extra confirmation, price action, or you could use your moving averages or your RSI to know when to enter your trades. So right, traders, I believe we've learned how to use the bullish kicker candlestick pattern, how to identify it, and how to trade with it. So by understanding its formation, the psychology behind it, and how to trade it effectively with proper risk management, you can significantly improve your trading strategy. So if you found this video helpful, make sure to hit the like button, subscribe to the channel, and turn on the notification bell so you never miss out on future trading insights. Thank you for watching, and until next time, happy trading.